Hi, it's Jeff Waite here at stockideas.org, and I just want to quickly walk you through equity is a great metric to watch for in companies. And the basic idea is that ROE measures a firm's efficiency at generating profits from every unit of shareholders' equity. ROE shows how well a company uses investment funds to generate earnings growth. So the formula here is net income divided by shareholder equity. And that's easy to find by looking at any company's financial statements. Um, the thing to keep in mind about ROE is that uh, the benefit comes from earnings reinvested in the company. So if a company is able to earn a really high return on equity, then you can assume it will continue to grow if the earnings are reinvested because you're adding more equity and you're going to have further growth from that. It's showing that uh, the company is efficiently using those funds to drive growth. Now, what does this mean? Well, I think we want to always be looking in terms of practical applications and how we can use ROE to find investing opportunities. So if you go to finviz.com and click on the screener tab and then go to the fundamental section, you can start to screen for return on equity. So you'll notice in this Wikipedia article, they say ROEs between 15 and 20% are considered good. So that's something we can build into a stock screen. So if you come over here, you can see return on equity is right here. And it's saying, again, how much profit a company generates with the money shareholders have invested. I set this screen to over 15%, and that gave us about 1,000 companies that were actually earning 15% or higher on ROE. Now, to kind of find the best return on investment opportunities, I set up some other criteria. Generally, I don't want to be paying too much for earnings, so I put a low PE. I don't want to be paying too much for future earnings growth, so that's under 2. And I put the price to book under 2. You can play with this a little bit if you want. You could even do under 1 and get this list here, but just for the sake of variety, we'll put it at under 2. Since we're being a little bit more generous on the price to book, I added a current ratio screen determiner. So we want current ratio over 1.5, so we know that current assets are covering current liabilities. And I don't want anything that's ever too indebted, so debt equity is under 1 here. And again, you can change these based on your own criteria. You could do under 0.5 if you wanted. But the gist of it here is now we have a list of relatively well-valued companies that are earning a high return on equity. And some of these might look familiar to you. Brooks is a company that I've been trading lately. I really enjoy. And there's just a ton of options here. You'll notice the default view in FinViz is this overview tab that shows you all these different metrics, and you can compare stocks based on country, market cap, price earnings, or even change in price. I really like the charts tab here in FinViz. So once we've found, stocks that meet our fundamental criteria, we can hit the charts tab and then get visualizations of how these stock charts are actually trading in real time. So then you can use these patterns to find out good entries. So maybe Brooks is going to be interesting if it can break up, above these prior highs or out of this consolidation. Same with CVX here. On the other hand, CTB, you might want to wait for that to play out, base out a little bit more. Same with Cisco. You probably don't want to be catching falling knives. On the other hand, some of these companies here look like they're consolidating well and could break out. And when all of the fundamentals are intact, that can put a bit of a floor on the price here because value buyers will come in and support the stock, in this case, maybe under $4. So that's how you can use return on equity to start to find opportunities. PMT here also looks pretty interesting. I need to do a bit more research on these stocks, but this is a great starting point to find, companies that are allocating investor equity very well and then are also not too expensively valued for that. So you can see there are a number of stocks that come up on this screen, some of which, look a little precarious, some of which look like they're really starting to hit their stride. So if you're interested on using return on equity as a way to find stock ideas, I recommend setting up a screen like this in FinViz. And then you can log into FinViz as a free user and save the screen so that you always have something to come back to. You can just log in, pull up the screen, and see, okay, what opportunities are looking good today, both from these fundamental criteria and then as well based on the charts that you're seeing. Of course, if you want to go a step further, there is the technical tab. You can screen for candlesticks, gaps, chart patterns, percent, volatility, how the moving averages are looking, how close the stock is to new highs, that kind of thing. So there's a ton of options here, but the main thing we want to focus on is, let's look for good companies that are earning a strong return on shareholder equity and that aren't too expensive relative to earnings and assets of the company. So I hope this has given you an idea of not only what return on equity means, but how you can use it to find stock ideas that are going to be profitable for you in the next week or month or year. So if you're looking for more ideas, really encourage you to check out stockideas.org or subscribe to my YouTube channel for more screens and ideas on how you can use FinViz and some of these metrics to find profitable investing opportunities. Thanks very much for watching.